Hello, everybody. This is Rombo here, and I hope you guys had a really good weekend. And today I'm doing a MULN special. It's going to be short and sweet. Just long story, not a lot of time tonight, and I'm really sorry about that. But I know a lot of people, a lot of buzz is around. I call it Mullen. It's just me. Um, and I was in at 156, got out at 250, got in at 284, rode it up to 3, whatever. That's me. I don't need to be the first one in, don't need to be the last one out. I don't I get out when I see it going down, and I get back in when I see it going up, and higher highs and higher lows, and that's just me. So did I make that full 300%? Nope. I made around 95% out of this whole move here, and guess what? I made money, and I wasn't worried. So 153%, I caught half of that. So I'm happy with that. But long story longer here. Let's go. I did get in the smart money area, just barely, but I'm barely smart, so that's probably where I should be getting in. We moved up. Again, guys, I just don't go by price. I go by the action. Okay, so I see it start sloping up and coming up, higher highs, higher lows. Then I know it's going up. I get in, and then I anticipate a lot of resistance right here, which we did have some. And then I'll show you later on why why did it stop right in between these deviations. One, price only moves so much in a day. That's why you have average trading range. And today, obviously, Mullen did very well, but I'll get back to that when we go to a smaller chart. This is the 3-year weekly chart, guys. So overall, you're probably wondering what this is. These are called monkey bars. This is a time at the price and how many transactions there are. This is not volume, it's transactions. There's a difference. Okay, you could have two people going back and forth, back and forth, back and forth, and doing a lot of transactions, but not a lot of volume. So volume, you'd have the profile volume on here. I have that on other charts, not on this one. So that's what this is. And it tends to be support and resistance where there's a lot of transactions. So right here, so let's say we're up here and it breaks. It's kind of like a tree. You got a big tree branch. If you're barely following that big tree branch, it's going to hold you. But if you're coming down hard, it's going to break through and then pop down to the next biggest tree branch. Okay. And then also down below, when there's not a lot of volume and there's just one transaction down there amount, you pretty much know that you're at the bottom, and same thing with the top. And this is what they call the playground. This is kind of like the deviations. This is where 70% of all the action is going on right here. So if you're down here, this might be a good place to get in. If you're getting up here and there's only 3, 2, or 1 numbers up here, you probably should get out. You're doing quite well, unless there's a lot of volume building up. If there's a lot of volume building up, then that means that this is starting to get supported and it might push up, just like right here. This might have been down here. It likes to fill the gaps, so that the little dips too act as support and resistance, and it likes to fill up to make a nice round bell curve. That's what it likes to do. So enough about that. I'll talk about that later on. I'll do a video on that. But so we're on our way up, and what happens? We hit resistance here, and now we drop back below this deviation here on the weekly. That's normal. Like I've explained many times before, where there's resistance, it likes to come back down, retest, and then go further down, or retest, break, come down, retest that line again, then bounce off. That's what those resistance lines like to do. Right here, we kind of came up from above, we broke, and now we came back down below. Probably during the day, we probably hit that deviation, maybe bounced a little bit, and then came back down and hit it again, and then bounced back down, something like that. So that's how it looks on the weekly. We get to the daily. Now these are the monthly deviations imposed onto the daily chart. Very rare. I think I said this in the last video. The average price on the daily is very, very close to the monthly and the weekly. We'll find out later when I get down to smaller charts. Again,
Yo, Minnesota's doing something.
Yeah, it never fails. So just like what I said before, we come up, we break both average prices. We actually pretty much gap over the average price on the daily, and then we retest it. So what that's going to do is probably a little too small for you. So here it comes up, comes back down. Now we'll either rebound tomorrow, but if we break, stay below, I would say the pretty much right where we're at right now, 321. Not a coincidence that it's stopped right there. I would like to see if 321 is supported. That's a good sign that we might be coming up to the 4 area. Let's see here, the 489 area. And if we break that, then obviously probably 634 area. But if we come back down below, we might retest it again, and then obviously it tested this today, 276. This is exactly where I thought it was going to go, and that's where it went for support. I think it was 281, something like that. So I should have gotten back in right there, but long story short, there was stuff going on, so I didn't. So there's options for seeing this going both ways. Now I know there's a lot of hype out there. This is going to go to $20 and everything. It could, all right. But guess what? I don't care about any of that. I care about what the chart says. That's the only thing I look at, okay? Because to tell you the truth, this is still in a big downtrend, okay? So this could easily just go right back down to 50 cents for all I care, okay? All I know is where it stops and what that tells me. And the options right here for where this is on the daily, very important to stay above 321. If not, it might come back down to 268. If it bounces up and retests and breaks that, then it's probably going to break that and come back up. But if it breaks 321, comes down, breaks 272 again, we might be on the way down. I want you to know that so you get out. Not just because I say it hits 272 or 270, you want to see the action that happens there. If it hits there and bounces up, there's a good chance it's going to continue to go up again. But if it hits that, breaks it, comes back up to it, and then comes back down, most likely then that is a sign that it's going to be going down quite a bit. So just to let you know that. The 4-hour chart, not really too much difference here. Again, this is the weekly, which was right by the daily, and again it broke, and then now it's coming back down to retest. I would think 281. Well, actually it did already. So it tested, it bounced off. Now we're going to see what happens here. The rest of the day we finished coming back down. So we definitely set in lower highs and but not a higher low or lower low. We set a higher low than the previous candle. So we're kind of maybe let's take a look at the monkey bars here. So we're kind of see this is kind of a little branch right here. So I wouldn't be surprised if we bounce around before we figure out what's going to happen here. It might want to come down here to fill this gap area right here. And then it gets pretty thick down here, and then obviously a lot of support down here on this weekly deviation. See what a coincidence! A lot of transactions here right on this line, but not a lot of transactions up here. So it definitely could move back up into the 470 area. But we're going to have to, again, see, I'm just giving options right now because we're kind of in a little sticky wicket because of this very weird situation where the monthly, the weekly, and the daily average price is so close to each other. So there's a lot of support and a lot of resistance here. So what does that mean? That means that there's a lot of fighting going on. Okay, so if you notice right here, we bounced off it, we broke it, and just like I said, it comes back down and tests it, right? And where did it bounce off of? Right here, resistance on the daily. Bounces down, hits that monthly support, breaks right through it. There's the weekly right here. It broke right through the weekly, broke right through the daily average price. Here we go, and the bears go, nope, that's enough. Comes down, and look at where it hits exactly right on the weekly chart, bounces off it. So what does that mean? I don't want to sound like a play-by-play guy, but that this is what you want to start getting a feel for. The action on daily and support, what things could do. There's going to be action at that area. It's either going to break through and then retest and take off, or bump, hit down and retest, or bump, hit down to the previous support, and then it might break that, bump up, and then come down. So all those scenarios you always have to be careful of. That's why you do not, I've said this I don't know how many times, do not buy right under resistance, because most likely it's going to bounce off, and then you could get in at a lower price as it bounces back up. Now here you might have gotten in here and might have got stopped out here. If you were smart, you would have had it just below support, and that's what you want. And then then you get your rip up, and guess what this is? Stop loss raid. Everybody's excited, they're moving up their stop losses, which they should, because what happens, comes up here, you get a double top, you got your stop right here at 392, and you get out at 392, and you made a really, really nice trade. Comes back down, you see it bounce off this support here, and breaks the previous low right here. You get back in, maybe not, maybe wait for it to break the resistance, come back down, and there's your support. It bounces off. Next candle that goes higher than that lower part of that wick or candle, you're in, at 322, and now you're sitting at 336. And here's this is the 4-hour half deviation here of I don't know which one that is. It is the 0.5 on the positive side deviation, and now we're hitting here, and now we're just stuck battling out after hours. And now pre-market, you're gonna want to watch these areas 335 to see what happens tomorrow morning. If we're above 335, I would think, depending on the action that's going on, if it comes up to 367 beforehand, I would not be surprised to see it come down to the 330 area again to retest that, and then break out to the upside. We are above the average price here now. We retested it, so that's a good positive sign of us continuing upward. Does that mean that's what's going to happen? No, it doesn't. We definitely could come back and retest this again, and more times it tests a level. Think of it like a battering ram. Someone's punching a hole or trying to punch through drywall. Well, it only takes a few times before it breaks through. And so that's kind of what this is doing. So more times it retests that, better chance that it's finally going to break through. Usually what you want to do is when you see it break, you don't get into it right away. You'll wait until it tests and then you get back in. So like right here, it broke through, it retests, and it comes up and it breaks through. So we'll see what happens with Mullen here. That's what it looks like on the 15 minute, the 5-day, not too much of a difference. We again, doesn't make sense that we stopped right in the middle. There is a half deviation here. I don't have it on this chart. I want to try to keep my 15-minute chart clean. But same thing. And now here's the money line on the 50-minute chart. Money line. It's the it's the candle of the high on the chart, which is right here. And here's the money line right here. This goes way back, and we're way above that, which is again a bullish sign. So that's good. Now on the 3-minute chart, now this is where volume is right here. This is volume, this green area, and then here's the monkey bars. And we're kind of in between two big volume areas here. So again, a little indecision on which way it's going to go. But these bigger bars, even with the volume too, that tells you there's resistance there, 358. This right here is the control line. So right now the bears are in control from today. So it got rejected here, and here again, see small transactions, not too many, and no volume. So that should have been shouting out to you to get out. So that's what we have on the 3-minute chart. But now on the daily chart, here's why it stopped. Okay, guys, this right here is called the standard error channel. Okay, and it's on the third deviation. Now, not the regular standard deviation, the standard error channel deviation. A little bit different. I only use it on the 1-minute daily chart. It's a little bit more accurate on the daily or on the minute chart than on the bigger charts. And what that is pretty much 99.9% chance that it does not break above here. Just about never. And sure enough, I saw it hit 418 right here, and look what happens afterwards. Comes all the way back down, gets awfully close to the -1 deviation. Rare, because most of the time, look, 70% of the time it stays within the -1 to +1. Breaks above, gets to the 1.5, a little bit past the 1.5 deviation, and then breaks down, and boom, look at that, right on the weekly average price deviation here, and bounces off it. Now, if you notice this big thick line right here, the blue one, that is what I call the money line. It's the candle that had the most volume of the day, or right here on this chart. It's the daily 1-minute day-long chart. It could be different on another chart. It could be a different candle, not on this chart, but on a bigger candle, like 5 days, later, beforehand. There might have been another candle with more volume, so then it would be anchored to that one on that chart, but not on this one. It's right here, and look what happens. Comes up, tests it, and bounces right off it. So that's a bullish sign on this chart, but you always have to remember how everything played out here on this day right here. Most of the volume happened up here. The control line on here is up here. This little line right here is where most of the transactions happened. So now if you notice, the volume doesn't always necessarily agree with the amount of transactions. What does that mean? Usually that means that a lot of people thought this was very, very important area right here. Okay. Usually within, this is called the value area on the volume profile. You want to buy below here. This is a good value to buy, and that's a good value to sell. And then kind of the same thing on the other end with the monkey charts. This is what they call the playground, but it's pretty much okay. If you're out here and you only see how there's 3 lines here. They're actually numbers, but I'm not zoomed in on it. If you come down here and there's only 1 line here, and look at no volume, all right, compared to the rest of the way, that's telling you that there's not a lot of sellers here, and buyers are going to come back in and pull it back up, and that's exactly what happened right here. So that would have been a great area to get into. But now back to the control. When the control line is higher than where most of the transactions come in, that usually means that people are thinking this is where the value is. So that is, again, a bullish sign. But that doesn't mean it's a guarantee to come back up there. But there's no volume right here. So if we, like I said before, if we get an uptick first thing tomorrow morning, we'll probably fill this area at 348 and work our way back up. There's a big dip right here also. The big dips is what you want to look at, like 379, 340, and then right here at 334. Okay, so there's a lot of, they could fill in these nodes. They act as support and resistance. And then on the opposite side, where there's a lot of volume, support and resistance right here, there, obviously right here, and right here, because that's where most of the transactions happen, and right here. These areas are very important to be aware of also when you're trading this. So what do I think is going to happen? It doesn't matter what I think, but personally, I think that it's going to be walking on eggshells type of a day. I honestly could. I don't see it really consolidating for a long time right here. Maybe a little bit higher, 341. It might stay there for a little bit, and then we could definitely break to the upside. And again, work on those resistances that I was telling you about before and try to break through. But what is closest is the weekly, which is at 315, or the daily. I would not be surprised if it came down tomorrow to around the 314, 315 area. And then we'll see what happens here. Because there's not a lot of transactions down here, not a lot of volume. So if it breaks through here, then that's telling me we're probably going down to 283. So I'll keep a close eye on this tomorrow at the bell and see where we're at, and go from there. If we start off way up here, I definitely could see us battling and making something like this in the morning, or if we probably break below 326, then you'll want to keep an eye on 315, and make some judgment calls there. We could break down and again to 283 and bounce off of there, so that might be a good value area to buy in here also. But that is a support line, and supports can be broken. That's why here's the monthly at 269. So if it wants to test that and break off that would be a great place to get in. Personally, I'd probably have a tight stop loss on it, 265, just in case if it breaks there. Then we're here's the money line here at 250. It'll probably try to do something there, bounce off of there, and then I could see consolidation right here for a while before it wants to continue downward or make a strong move to the upside. So that's what I have for Mullen for the day, guys. Sorry about not getting into any of the other tickers, but I'll try to do that tomorrow. And with that said, guys, have a good night, and we'll see you tomorrow.